Hello, hello, hello. So this is a mic test. Mic test. So guys, give me a few seconds while I set things up. I hope the screen is visible. The audio is clear. If it is, and if you are there, I would appreciate a heads up. Anything in the comment section, either here or on YouTube, would be appreciated. Just to clarify, we are live on two platforms, TradingView as well as YouTube. Give me a few more moments while I open up an additional tab for TradingView comments. Sometimes they are just not visible. Okay, so looks like we are live on both platforms perfectly fine. Screen sharing looks good, and audio quality is also, at least at my end, I can see look is, and both are shown as online. So guys, if you are online, I would appreciate a comment here suggesting or clarifying, not suggesting, that audio and everything is clear. I have just loaded up the disclaimer on screen. As I said, we'll start just in a few seconds. Looks good. Okay. So it looks like everything is well set. So let's just start at this point in time. So my name is Nirav and I'm the admin and owner of 50 Eyes Market Analysis. Before we move any further with this webinar, first let's get ahead with the legalities. The disclaimer here on screen presents the one second. Yeah, so the disclaimer here on screen presented is suggesting that all content presented is for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views, you yourselves will be liable for your profit loss or loss of profit, right? And with that out of the mind or out of the way, I should say, let's have a quick, what do you call, one second. Again, there is some internet issue here at my end. Okay. Yeah, so with that out of the way, let me just give you a quick introduction. So my name is Neerav Yadav. I'm the admin and owner of 50 Eyes Market Analysis, which is a website where I have been sharing my views on markets, stocks, forex, commodities, cryptos, indices, etc., etc. For many years, almost 10 plus years. And you can visit the website by visiting this URL and check my past trading opportunities webinars here. So by the way, this is the 15th in the series of trading opportunities webinars. We have done 14 so far. They are done on Monday, Wednesday, and Friday of each week at 2 p.m. GMT. If you are not or were not aware of the right. And continuing further with the introduction, this is my YouTube channel called 50 Market Analysis. The broadcast is done live on both YouTube as well as TradingView accounts. So you can catch me whichever what do you call channel you prefer. If you prefer TradingView, that's good. If you prefer YouTube, then you can just catch me on YouTube. And rest of the things, yes, I'm also the author of the book called Think with the Markets. It is available on Amazon's Kindle platform, which is their ebook platform, so you can get it instantly. And lastly, before we move forward and start the actual webinar, This is my forecast accuracy for all those 7+ years since I've been working, and we have compiled everything that I have said publicly. And you can see 2016 we had an accuracy of 83.34, 2017 87.75, 2018 is 84.61, 2019 is 84.8, 2020 is 88.7.52, and 2021 is 82.22. If you are interested, you should be able to check the instrument name over here: crude, gold, S&P, Nifty, Axis Bank, Amazon, and the date in front of it. These are the date of the webinar and instrument discussed in the webinar. This is the view we had. This is the link for the webinar. And this is what happened after our discussion. Exactly as expected, not as expected, exactly expected, etc. etc. So based on this, what do you call analogy, we have compiled this track record or methodology, I should say. And you can just scroll down and check that we had 37 out of 45 correct. Similarly, you can just check any of these webinars. So I just wanted to show you off this because in this industry, 60% is considered very high, and I have maintained 80% plus for 6+ years now. Keep in mind, 2022 is not yet published. Once it is, it will be 7+ years. So that was all for the introduction, and let's head over now to our actual webinar. So one more thing, these webinars are connected in this order. We will discuss Euro USD, then EURCAD, then USDJPY, then EURJPY, then crude, gold, S&P, Nifty, and then Bitcoin. So in this way, we will cover these things. And if you have any doubts, you can then post them in the comment section. I'll just take a look after I discuss the particular chart. Basically after my discussion over, then I'll take a look at the comments and revert back accordingly. That's about it. Let's head over and let me see. There are some comments already. Suryansh, I'm working with some companies. So these are called prop trading firms. So in that sense, you don't need a broker. You have to sign a contract with them. Just Google that term. You will come to know what I'm talking about. I think you had posted that question yesterday as well. So, anyways, let's head over to our first chart, which is Euro USD. And as you can see over here, the chart is following so far what we had discussed in the last webinar. So, in the last webinar, our view basically was that this chart will have possible downward movement because we expected that the correction to the upside was complete over here. That was our expectation, right? And the basis of the expectation was that we had a possible triple zigzag correction, right? Now, I have done this many times already, so I'll just be very quick with it. So the triple zigzag correction will basically be something like this, as I'm drawing on the rough hand side, the right hand side. The wave W is a wave in the upward direction. The wave Y is the second wave in the upward direction, and then the wave Z. All these waves are connected by connecting wave X. Connecting wave X. This is your connecting wave X, and the W's and Y's and Z's are all complete. If this count is correct, then we expect this market to go down. Basis that we are expecting this market to go down, and the technical stop loss is the last high. Right? So as such, it is not moving so far down, but technically and what do you call risk to reward while speaking, the risk is very small, reward potential is higher, and the analysis is there. So this will be a setup for an aggressive trade. For more conservative entries, we can wait for more downside. Basically, something taking out this congestion zone. We draw it in a box. Something taking out this congestion zone to the downside would be more of a better trading setup for shorts. So that's about it for Euro USD. As I've covered it in more detail in the last webinars, I don't feel the need to do it over again. Simply following what we had discussed. If there are doubts, you can post them in the comment section. Otherwise, we'll move to the next chart, which will be the chart of EURCAD. EURCAD, as you can see on screen, we have the chart on the 4-hour time frame. Last time when we discussed this chart, the setup was very simple. We suggested that if this market closes below this trend line, then this will be a setup for possible sells. And I said very clearly that it has given some false breaks previously. So this one again can be false break. Based on that, I pushed alert over here at 1.43939, and I moved it even lower in price right now. The idea is that we are not going to take the shots right at the break of the channel, although that is the most risk to reward wise best opportunity. But we are going to wait a little bit on this counter, right? And then this market is progressing. I'm also seeing that it is possible that this count is incorrect, and this correction, although will be there, but it will not be a very big correction. Suggestively, what I'm saying is that it is possible that we are seeing a possible impulse in the upward direction, and this is possibly just a wave 4. So we expect it to go down, but we do not expect it to go down too much. So on that, I'm not very much interested in this market unless I see some very good evidence. And so far, nothing like that has appeared on screen. So yes, the setup remains. The setup remains for Samsung, but any options that I might create on this counter will be very small. Nothing to add again here. It's still following the plan as we discussed in the last webinar. So I'll just move on quickly to the chart of USD JPY. Unless you have any doubts, you can just post them in the comment section. Hi Gangapati. Good evening, man. I'm doing well. How are you? So next chart is the chart of USDJPY. Let me look that up on screen quickly. And yes, this one has a bit of things to discuss here. It did not really go as expected. As we were pointing out in the last analysis, our main view was we were expecting that this correction, which started from the price level of 151.884, roughly speaking, here, we expected it was complete over here at Y. We were expecting that it will go something like this, right? However, what it did was it went below our invalidation level, which was the level around 134.64. And once it went below that, it opened up possibilities of downside and updation of the count. So what you see now on screen is the updation of this count. In this updated view, what my thought process is that the correction was not complete at this point, but rather it was continuing in the downward direction as a triple zigzag. Currently, what we have on screen is the possibility that this triple zigzag may have completed here, but we have no confirmation thus far, right? So no longs on USDJPY for now. Right now, what we are gonna do is we are gonna keep this count on screen on our charts, and I'm just gonna keep observing it from time to time to see if there is any further evidence for adding new longs, or if it's still continuing, then for adding new shorts. So on USDJPY right now, what I can do is that wait and watch is the scenario, and this is the updated view. Right. I'm moving fast with these webinars because I'm seeing that most of the people are generally active on Friday webinars, right? And also I'm seeing that the comments are also there, but not that many. So, anyways, it's not like I'm not gonna take your doubts. If you have anything, you can just post in the comment section. Next will be Euro JPY. That one also had a change from what we previously expected. So this is again interesting one. Right here on screen we have it on the weekly time frame. So let me just go to something more reasonable for us. Actually, we should just start with this. So on this weekly time frame, what I see over here is that, as per my understanding, that from this point of reference around the price of 114.332, I expect that this was moving up as a diagonal, and it looks like the diagonal may have completed over here at the price level of 148.377. 148.306. Sorry, 377. Actually, you know what? The exact level would be 148.4043, 403, as you can see in the top left. So, leaving that aside, from this point of reference, if the diagonal is complete, by the way, guys, diagonal is a wedge kind of pattern. Wedge kind of pattern, I basically mean that something which is converging, something roughly speaking, let me draw it on the rough hand side, something like this. First wave up, correction down. So, as you can see over here, we have an overlap between this first one and the fourth one. So this overlap is one of the significant characteristic traits of a diagonal pattern, which is exactly what we see on the actual price chart as well. Overlap between the first and the fourth. So with that out of the way, like what's the basic pattern I've just clarified. The way to trade it is that someone's saying audio is not properly working. Let me check. Madhavji, can you refresh or just close it and then open this app again on of YouTube if you are using it as an app? Yes, I see. Right? So no long USDJPY for now. Right now, what we are going to do is we are going to on our charts and I'm just gonna. Yes, I can see there is some disturbance here. Definitely, the audio is not the best quality, but setup looks to be the same. I have not changed anything. Let me just check some things quickly. So, is there any difference? Actually, if it's audible enough, we'll just continue with it and I'll check what the problem is after the webinar because right now, from the looks of it, everything seems to be as it is. I have not really changed anything on this setup. So hopefully it is audible enough to understand what I'm saying, right? Uh, I'll I'll be very happy if you can just let me know in the comment section. Okay, so what I was doing was I was explaining EURJPY, right? So EURJPY, what I think is happening here is that if the diagonal is complete, which we think it is, then it should see some downward movement. And in my understanding, it should see a downward movement as a possible five-wave down structure or what we'll call an impulse in the downward direction. Now, an impulse in the downward direction would mean that after this completion, this trend line will be broken and we see five waves down. So first down, second up, third down, fourth up, and fifth down, something like this as I've drawn roughly on the right hand side. So to analyze that, let's head over to something more useful for us. Let's head over to this should be enough to the hourly chart. So on the hourly chart, what we see over here is that we have a possible wave one over here, which is moving in the downward direction, and we have a wave two, which is in the upward direction. Right? And this break, this is the trend line of the diagonal which we were discussing. And with this break, we have what we would call the starting of the wave three. So again, this is not the end of it, and probably it is in the middle of its progression. So that basically means we have some more downside remaining. We can think of it as a dot one, think of it as a dot two, and dot three followed by dot four sideways, and then dot five. So what I'm really saying over here is that from this point, you can draw it on the right hand side. From this point of reference, what we expect is that market is moving down in five waves, so this will look something like this. And in this progression, we have the one and two already complete. So that's why I'm saying there will be a 3 down and then a 4 up and a 5 down. And within this 3 down, we will again have 5 waves because that's the fractal nature of Elliott waves, right? So if you magnify this wave 3, it should look something like this. Roman 1 inside it, Roman 2, let's say Roman 3 down, Roman 4 up, and then Roman 5 down. So based on that understanding, why I had labeled it like this, I believe you should be able to catch my drift now. So this is, guys, the updated count. Let me remove some drawings here. This is the updated view and more downside expected on this counter. The only time I will be concerned about this view is when, one second, let me finish this up. So the only time I'll be concerned about this view will be if this market goes above this wave to high 145.856. Right. So above this level, if this market goes, then there is that it might be doing something else. If not, then we do not change our count for now. We follow it as we have on screen. Looks like the audio problem also has resolved. Anyways, getting back to the analysis here. So EURJPY, as I said, we expect more downs to continue. Right? Invalidation level of concern I have already discussed at wave to high around 145.856. And with that out of the way, next chart of discussion will be the chart of crude oil. Again, a very, very important one because it is following our setup rather precisely. If you have any doubts, check the comment section in a few seconds while I load up the screen for the chart of crude oil. You can just type them in the comments if you have any doubts. So this one is the one we are following. CL futures CL. Okay, see there, crude oil right here on screen. So on this chart of crude oil, let me just note down the timing for it. So in the chart of crude oil, as we discussed in the last webinar, our view was that if this market takes out this high, which is this high of 78.12, let me check exactly. Yes, something like that. 78.108, let's say. So once this high was taken, we were going to consider this market still moving upward for wave C, right? And as we know, wave C will have an impulsive or a diagonal kind of nature, but both of those suggest that it will have 5 waves in the other direction. So roughly we can draw this as a third wave, fourth wave, and fifth wave. So this is the rough outlook of how we expect this market to proceed in the other direction. And the setup was triggered about 2 hours, 10 minutes before we started this webinar, roughly speaking, or 2 hours, 20 minutes, something like that. Because at that time, this market took out this high and I got an alert. I got a second alert of this market taking out this channel. So basically, that means that technically we can hold some longs on this counter and we can push our stops below this low, and the exact stops will be actually over here, but that will be too low, and at that point there won't be much point in keeping long. So in this kind of situation, I find it best to keep the stops not at the technical level, but at the level of what do you call it, position sizing, which your position sizing allows. So that will be my take on crude oil, and let me just quickly push the update here. So this is what I think is happening in crude oil, right? Technical stop, last low, expected at least two legs in the upper direction, one for wave 3, one for wave 5, following the plan as we discussed last time. That's about it for crude oil. Next chart, we'll have a look at gold. Let me see which one is the one we are following. And before we move to gold, here's a request, guys. If you are following my work for quite some time, or if you have just started it and if you like it, then make sure you hit the like button on YouTube. And if you are on TradingView, then hit the rocket button, which we have on TradingView. It helps other people find my work, and it also helps the algorithm to push the content up. So, guys, that's about it for my request. Now, let's have a look at this chart. 1 second. Yeah. So, one more thing. Yeah. Okay. So, as you can see, we have the chart here. We have the 4-hour chart loaded on screen. So, in the last webinar which we did, our view was that it is possible that this may have completed as we see here as a diagonal, right? But however, what is seemingly happening is that this market is continuing its upward journey, right? And because it is going still in the upward direction, we will have to consider the possibility that this market is possibly still following the diagonal, right? It is possible, and the other possibilities I'll discuss very quickly. So first of all, if I remove everything from this point of reference around 1614, roughly speaking, we have A up, B down, and C up progression. And a up, B down, C up progression is very simple in technology. It is something like this. So three waves in the upper direction, three waves down, and then one, two, three, four, five. Right. So these 1, 2, 3, 4, 5 part, which is called also the C wave, can either be as a simple impulse like this, or it can be a diagonal which has overlapping waves. So in this particular case, it looks like we have what you call the diagonal. I've just discussed the diagonal in one or two charts before this one, so I'll not redo it. It is basically a wedge-like pattern. There's a little bit overlap in price action, and if you draw the trend lines, they should look like this. Right? So based on that, what I can say is currently that the minimum we are expecting is that this market will take out the high. That's the current take on gold. So short term wise, we are expecting this market to go higher than 1824.43. Right? And swing perspective, either it can go higher than this level, take some resistance over at the trend line, and then reverse possibly. It's one of the ways this market can proceed. And second thing that I think can happen over here is that this market can continue in the other direction. Right? So both these possibilities exist. Apart from the other possibilities, which I'll not discuss at this point in time, these are the two main outlooks we will consider right now. So that basically means short term wise, we are expecting longs, and swing trade wise, it's a wait and watch because there's a possibility which is a strong up move, which will continue for quite some time, and other one suggesting a reversal. So that's my take on gold so far. It is following our plan, and nothing more to add. Next chart we will load up is S&P's 500, and again, as I said earlier, if you have any doubts, you can just post them in the comment section. If you are clear, I would appreciate if you can clarify that by typing in clear or understood. But that would be it for that chart. Let me just load up. Yeah, this is the chart of S&P 500, which we are following right here on screen. So in this chart, as you can see, it is following our plan from our last discussions, like picture perfectly. If you remember in the last discussion, which was done on Friday, the market was somewhere here, and I suggested that it will continue to go lower. We were, by the way, if you have not watched the previous webinars, we are short from this level. So if I remove everything, it is around 39.56, and we have got more than 150 points of down move. So in the last webinar also, I suggested that the down move can soon become complete, and hence you should trail your existing shorts. And this is what happened later on as the structure of the impulse seems to have completed here. Right now, what we have is a correction for B wave in the other direction. So basically, what I'm saying is that we are following something like this. This is the structure for A wave complete. B wave should look something like this, right? And once this B wave is complete, it should look something like this, right? That's our expected progression. So basically, long story short, if this is the A, once the B is complete, you will see some downside, right? Now, where is the B going to complete? There are many things we can use, but in this particular case, uh, I won't go into too high targets because the trend overall looks bearish. So we will just consider the lower targets or not that big targets. First of all, 38.79 or 38.77, roughly speaking, is the first level. Then the next resistance should be raised around 39.09. So if the market goes to those levels, the strategy would be to book partial profits here, then book partial profits here, right? And further on, it can go within this zone, which I have marked with this white box around 39.60 to 4004. But keep in mind, this is not the kind of a trade where you will just hold it for the highest target. We just trail our position and we look to exit partially on these levels. We will call them T1, T2, and T3. So that's my take on S&P's 500. It is precisely following the plan, right? Next chart will be the chart of Nifty, which has had a lot of activity today, like literally a huge amount of activity. I was trading it intraday for the complete section, almost the complete session, except for the first 10-15 minutes, and made extremely high returns. But anywho's, let's just head over to the chart of Nifty and see what actually is happening here from the count perspective. So as you can see on this chart of Nifty, we have a candlestick chart with 15 minutes time frame, and what I have over here is the 18887 as our point of reference. So point of reference is basically the starting point of the analysis, right? From this pointing, from this point of reference, we have the wave W down, and then we have is multiple possibilities incoming from here, right? So I can't really discuss every single one of them because that will make it a very lengthy analysis, which is not really the objective of these webinars. But what I have over here is a simplified version. In this way, we can. Just one second, let me see which one. Yeah. So in this particular analysis, we can say that this one is our X wave, right? And that would mean there is a Y wave in the downward direction remaining. Now, the thing with this picture is that it is unclear to me if the wave Y is already complete here or if the wave Y has one more down leg remaining. So that basically means that it is possible that this market moves further low or further to the downside, and it can also reverse. So in that case, our trading strategy is rather simple: move lower than the last low should bring in some more bearishness or some more sell-off. So it will be an intraday kind of thing that I'm discussing. That if the market moves lower than this last low, then I'll be interested in selling it more. Second thing is if it forms some sort of continuation pattern, some sort of sideways movement here within this range or a little bit above this range as well, then I'll again be interested in looking for some shorts on this market. If not, then it's a wait and watch. So look out for shorts. For longs, it's a wait and watch. We don't have any confirmation for longs. And one more thing, let me see which trend line I was looking for. Yeah. So another thing is that this market, if you draw this trend line, it is seeing some support over here. It doesn't really much. It's not much of an important trend line at this point, but it seems like it will become a bit of an important thing to watch out later on. And in the sense that if that market blow, let me draw the exact level once again. So 18,165, right? So if this market goes lower than 18,165, then anything that goes up can take resistance at this trend line. So in that sense, it will become important, I believe, later on. But right now, it is something you just keep in the back of your mind. So that's my quick take on Nifty. By the way, guys, I was able to trade the session and catch these lows or this move lower and then this move lower and over here. The activity was so high that the contracts were moving 10, 20, 30 points in seconds. So it was a very fun trading session today. So next session also will be, I believe, interesting because it looks like some more it can lead it to much lower. That was my quick take on Nifty, and the next downside target I also have marked here is around 18,114. So keep that in your mind or in your trading plan as well. That's about it for Nifty. Nothing more to add here. And before we move any further with BTC, just I like to quickly point out that if you want to learn this trading methodology or this way of analyzing the markets, then you can visit my website 50 Eyes Market Analysis, and you can look for the video courses that I have and the personalized training classes that I have over here. Right. If you are interested in reading the book, by the way, then you can go to com/think dash with dash markets. Or just copy this hyperlink. Sounds weird when I speak it out loud. So here you will find the link for all the different countries, or you can just go to Amazon.com or your country specific Amazon and type the name of the book or the ASIN code in case you are having difficulty with the name. So that way you can just access the book. Furthermore, if you are interested in getting updates and not missing out these webinars because we discuss live markets, then you can just not join, follow my Twitter handle, which is at the rate 50 underscore EYES, and all the links for upcoming webinars and other things as well are posted here. So that's my, what do you call, advertisement, marketing, whatever. Yeah, and also once again, guys, if you are watching on YouTube, hit the like, and if you are on TradingView, hit the rocket button there. So let's quickly head over to Bitcoin. So Bitcoin, as we discussed in the last webinar, it is sort of doing precisely as we discussed there. Not much has changed. So last webinar we were saying that this looks like a wave A up is complete and there's a triangle here for the wave B and then a leg up for C, which means this market can go straight down from here. And the other possibilities were that it can go sideways or form a more complex WXYZ pattern going sideways a little bit to the upper side, that is forming a channel, parallel channel with an angle in the upper direction. But long story short, this is the minimum pattern which is required for a fall, which is an A up, B down, and C up. And since this is complete, this market has opened up the possibilities of a clear down move from here. And after that, we are expecting the target levels around 15,250 and lower targets around 14,790, roughly speaking. So that's our quick take on Bitcoin. More downside expected. The upside possibilities would be that this market is following a WXY count, but no confirmation yet, right? Confirmation for it will only come once the market takes out this high, 18,360. Even when it does that, the swing trade still remains in the downward direction. So best to take strategic swing trade in the downward direction instead of following a counter trend move. But anyways, you know better. If you are trading Bitcoin, I generally don't trade Bitcoin or cryptos. So that was my quick take on BDC, guys. If you like the content, I would request you in the end of this webinar to share it with your circles, at least three people in your circle. If you have Discord, share it on Discord. If you have Telegram, share it on Telegram. And also, if you have what you call Twitter handle, what you are using social media like Facebook, or if there's anything else you are using, I don't know if there is any other social media which is famous these days, then kindly share it over there. We need more reach to continue doing these webinars. And that was all from me. I hope to see you in the next one.